Before Cerebras even sold its first share to the public, the math was already moving. The original target was a price range of $115 to $125, aiming to raise about $3.5 billion. But as the news hit full throttle, they're now looking at a range of $150 to $160 and bumping the offering to 30 million shares. At the top end, that's a $4.8 billion haul, 20 times oversubscribed. That's no normal IPO. Now, here's the other half of that picture. 86% of Cerebras' revenue comes from two government-linked entities in the UAE. U.S. revenue didn't grow last year. It fell 34%. And the $237 million profit they reported came from a one-time accounting adjustment on warrants, not from the actual business. Both of those things are true at the same time. The hottest AI IPO in years, and underneath it, a company still losing money whose revenue base is almost entirely overseas. Today, we're going to figure out what to make of that. My name is Phoebe, and you're watching Trading Key. What Cerebras actually is. Let's get the baseline right. Every major chip company makes chips the same way. You start with a silicon wafer and cut it into hundreds of small individual dies. Each die becomes one chip. That's how Nvidia, AMD, and Intel all work. But Cerebras doesn't cut the wafer. They use the entire thing as a single chip. That's what wafer-scale integration means. Their current chip, the WSE3, is 57 times larger than Nvidia's H100. It has 4 trillion transistors and 900,000 AI-optimized compute cores, compared to roughly 16.9K CUDA cores on an H100. Power draw is 25 kilowatts, which is why their systems need water cooling. The size matters because of a bottleneck called memory bandwidth. When you run a large AI model in production, data constantly has to travel between memory and compute. On a traditional GPU cluster, that data jumps between chips across interconnects, which creates latency. On the WSE3, all 900,000 cores and their memory fabric are on one die. The data never leaves the chip. That's where the inference speed advantage comes from. And the gap is not marginal. On Llama 4 Maverick, independent testing put Cerebras at 2,522 tokens per second, versus Nvidia's Blackwell B, 200 at 1,038. On DeepSeek R1, the gap was 57 times. These aren't Cerebras' own numbers, they're from third-party benchmarking firms, which means the performance lead is real. Whether it holds up as Nvidia keeps shipping new hardware is a different question. But right now, for inference workloads, the chip does what they say it does. Let's look at Cerebras' financials. Revenue is the easy part of this story. Cerebras went from $24.6 million in 2022 to $510 million in 2025, roughly 20 times growth in 3 years. Analysts are projecting $1.1 billion for 2026 and $2.3 billion for 2027. If those numbers land, the trajectory is legitimate. The harder question is what that revenue is worth per dollar. Gross margins came in at 39% last year. That sounds decent until you put it next to Nvidia's 74%. Lower margins mean less cash per dollar of revenue, which matters when you're funding the R&D required to stay competitive in chip development every few years. Margins are improving, since they were 12% in 2022, but the gap is still wide. Then there's the profit question, and this one matters. Cerebras reported GAAP net income of $237 million in 2025. That number will show up in headlines, and it will be misleading. That profit came almost entirely from a $363 million non-cash accounting gain on a warrant revaluation. Strip that out, and the non-GAAP net loss was $75 million. Operating loss was $145 million. So Cerebras is not profitable yet. At the updated price range of $150 to $160 per share, the company is valued somewhere between $27 and $30 billion. On $510 million of 2025 revenue, that's roughly 55 to 60 times trailing sales. Nvidia trades at 20 to 25 times, AMD trades at 10 to 12. Cerebras is priced as if the billion-dollar revenue years have already arrived, but they haven't. Cerebras deal with OpenAI. The OpenAI contract is what gives this IPO its anchor. OpenAI agreed to purchase 750 megawatts of AI inference compute capacity from Cerebras across 2026 to 2028, with an option to expand to 2 gigawatts by 2030. Total contract value is cited at $20 billion or more. For a company doing $510 million in annual revenue, that committed pipeline is a big number. But the structure is more complicated than a standard customer contract. OpenAI is Cerebras' biggest customer at 24% of 2025 revenue. OpenAI also gave Cerebras a $1 billion loan at 6% annual interest to fund data center build-out, repayable in cash, or through product delivery. And through warrants issued as part of the deal, OpenAI could become up to a 10% shareholder once it exercises them. So, OpenAI is the largest customer, the lender, and a future equity holder. That's a lot of alignment concentrated in one place. If OpenAI decides to accelerate its own in-house chip development with Broadcom, or pulls back on inference spending, Cerebras doesn't just lose a customer. It loses its primary revenue source and its capital partner at the same time. This doesn't even account for the fact that Sam Altman is personally an angel investor in Cerebras, which creates its own governance questions that proxy advisory firms will likely flag post-IPO. The AWS collaboration announced in March is genuinely positive on this front. Getting the WSE3 into Amazon Bedrock puts Cerebras hardware in front of thousands of enterprise customers without a direct sales relationship. That's the kind of distribution that starts to reduce OpenAI concentration. But it's early, and it hasn't shown up in the revenue numbers yet. The UAE Revenue Concentration? Let's be real about the most important number in this S1. In 2025, 62% of Cerebras' revenue came from one entity, the Mohammed bin Zayed University of Artificial Intelligence in Abu Dhabi. Another 24% came from G42, also Abu Dhabi-based and government-linked. Together, that's 86% of total revenue from two customers in the same country, both connected to the UAE government. This is also why Cerebras couldn't go public in 2024. The company filed its SON in September of that year and then pulled it as CFIUS opened a national security review. The concern was G42's historical business ties to Chinese technology companies and whether those ties created a pathway for advanced US AI hardware to reach China indirectly. Ultimately, the review was resolved in April 2025. G42 divested its Chinese investments entirely and agreed to a $1.5 billion partnership with Microsoft that was contingent on those divestitures. G42's Cerebras shares are structured as non-voting. CFIUS cleared the deal and the IPO path opened back up. But CFIUS clearance doesn't fix the concentration. 86% is still 86%. Any shift in US-UAE relations, any tightening of export controls, or any change in how the UAE government allocates its AI budget could reshape Cerebras' revenue base fast. And US-billed revenue, the part most insulated from that geopolitical risk, fell 34% year over year in 2025. From $282 million down to $187 million. Domestic enterprise adoption is not accelerating. That number deserves a lot more attention than it's getting right now. The last independent AI inference chip company. The competitive picture has shifted a lot in the past 6 months, and it changes how you should think about this IPO. Nvidia has always been the dominant force. Roughly 80 to 90% of the AI chip market, and a software layer in CUDA that's been built up over 15 years. Most AI researchers, most major frameworks, most production systems default to it. Switching to a different architecture means rewriting workflows and retraining teams. That moat doesn't disappear in a quarter. But the specialized inference chip space has started to consolidate. Groq built a language processing unit specifically for inference speed, fast enough that it was frequently cited alongside Cerebras in speed comparisons. Nvidia acquired Groq in late 2025 for about $20 billion. Samba Nova, another specialized architecture player, is reportedly in acquisition discussions with Intel. If both of those deals close, Cerebras is the only major independent inference chip company left. You have to start looking at that position two ways. The bull case is that being the last independent player raises Cerebras' strategic value considerably, both as a standalone investment and as an acquisition target for any hyperscaler that doesn't want Nvidia to own all the inference speed technology. The bear case is that Nvidia has now absorbed Groq and is building inference capability into its own roadmap with far more resources than Cerebras has. The company Cerebras was benchmarking against a year ago is now inside Nvidia. Here's what to watch. 4 things matter over the next few quarters. First, U.S. revenue. The AWS Bedrock partnership needs to start converting enterprise customers. U.S. billed revenue has to reverse its 34% decline. If it's heading back toward $250 to $300 million by the end of 2026, the customer diversification story is working. If it keeps falling, the UAE concentration gets harder to explain away. Second, gross margins. At 39%, Cerebras isn't generating enough cash per dollar of revenue to fund the R&D pace this market requires. Getting toward 50% is the condition under which the current valuation starts making sense. Third, OpenAI's chip strategy with Broadcom. OpenAI is actively developing in-house inference chips alongside its Cerebras contract. The timeline on that project is the most important variable in this whole story, and it's one Cerebras has no control over. Fourth, the 180-day lockup. Pre-IPO shareholders, including Benchmark, Tiger Global, and the UAE entities will be able to sell roughly 6 months after the IPO. That's a predictable window of selling pressure that retail investors should factor in before buying. This is not a simple call. The hardware advantage is real. The IPO demand is extraordinary. The consolidation of competitors is creating an opening that didn't exist 12 months ago. But 86% revenue concentration in 2 foreign customers, a profit that's an accounting entry rather than an operating result, and a 5 times sales multiple don't leave much room for things to go sideways. So, is the Cerebras demand justified given those risks, or has this market gotten ahead of itself on AI hardware? Where do you stand? Let me know in the comments down below. Thanks for joining me today. If you found this video helpful, remember to subscribe to Trading Key, give this video a like, and share it with a friend who might just benefit from learning this too. With that, I'll see you in the next one.